Welcome back. So, the material we looked at today digs into that interesting gold market situation, the rally pushing near $4,200, even with that strong NY Fed manufacturing data coming out.
Right. A real head-scratcher on the surface.
Exactly. Let's jump right into the first point, which is about strengthening the core argument here.
Okay.
You need to really articulate why it looks like gold is, ignoring that headline manufacturing number. We need to go beyond just saying it is to exploring the cause.
Got it. Moving from observation to explanation.
Precisely. The setup is clear. Gold's up near, 41.88, over 1%, while the Empire State Survey leaps to 10.7. That's miles better than the minus 1.8 expected.
Yeah, a big beat.
But framing it as gold just ignoring the data, I think that might be, a bit too simple. It makes the market sound irrational, doesn't it?
Not immediately obvious. I think the key might be something already mentioned in the piece.
Oh, yeah? What's that?
Well, it mentions that markets are mostly blind right now because of the U.S. government shutdown situation. Congress not sorting out the funding.
Ah, right. The lack of the usual big data releases. Jobs reports, CPI, GDP, the stuff the Fed normally watches like a hawk.
Exactly. That context is mentioned, but it feels kind of passive. It needs to be the active reason why gold might be prioritizing safe haven demand, the political mess, over one positive regional manufacturing report.
So it's not ignoring the 10.7, it's just weighing it against something bigger?
Precisely. The systemic risk from the shutdown uncertainty potentially outweighs a single, localized positive signal. Gold's acting as a barometer for that risk, first and foremost.
Okay, I see. It's like worrying about the whole ship sinking versus admiring the new paint on one cabin door.
That's a great way to put it. So concretely, you could connect those dots right at the start. Suggest the rally is a flight to safety because the shutdown risk feels more immediate, more globally relevant than this regional survey showing some health.
Even though the 10.7 reading is a sharp improvement from that previous minus 8.7.
Right. Acknowledge the improvement, but frame it clearly within the larger context of political risk being the dominant driver for gold right now. That shifts it from market ignores data to market intelligently prioritizes systemic risk. Much stronger.
Yeah, that definitely elevates the analysis. Okay, so that's strengthening the why. Now, let's dig into the survey details themselves. There might be another angle here. Another rational driver that's maybe getting overlooked. I think we need to reframe the argument to focus on the prices paid index as the real engine behind the rally. The idea being the market isn't ignoring the good news. It's laser focused on the inflationary news within the report.
Ah, okay. Focusing on the cost side of the equation. I see where you're going. Because, yes, the activity numbers were impressive. New orders jumping from minus 19.6 to 3.7, shipments up to 14.4 from minus 17.3.
Huge swings, right? Makes the gold rally seem odd if you only look at those output figures.
It does. But then there's that prices paid component.
Exactly. And right now it feels like a bit of an afterthought in the piece. It says improved activity is still at a cost. Almost a footnote.
But that cost is potentially the whole story for gold. That index jumped sharply from 46.1 up to 52.4.
Okay, hold on though. Are we sure gold investors pivot that fast? They see the big jump in new orders, a clear positive sign, and immediately focus on a secondary component like prices paid? Couldn't it just be the shutdown fear driving things?
That's a fair question, but I think this is where we separate simple reporting from deeper analysis. For a gold investor, growth is only truly positive if it's not inflationary, right?
True. Historically, that's the case.
Those activity numbers, orders, and shipments, they can bounce around. Maybe it's just a temporary rebound. But prices paid, that tells a different story about underlying, maybe sticky cost pressures.
And 52.4 is significantly above 50, meaning more firms are seeing costs rise. And it's a big jump from 46.1, which was actually suggesting costs were easing a bit before.
Precisely. It signals input cost inflation is maybe accelerating again, right alongside that better activity. That's like the classic textbook scenario where gold really shines as a hedge.
Okay, so the core argument shifts. It's not investors are worried about the shutdown. It's more like investors see the inflation signal in the data and are reacting logically.
Yes, exactly. It frames the market as rational, responding directly to the inflationary evidence in the survey, that 52.4 spike, rather than irrationally ignoring the output figures. That's a much more robust and frankly more interesting argument for anyone trying to understand market moves.
So how do we make that concrete? You'd need to bring that prices paid discussion way forward.
Absolutely. Make it central and use contrast. Maybe argue that this jump in input costs, crossing back over 50, is more significant to gold buyers than even the positive signal from the employment index rising to 6.2 from minus 1.2.
Right. So the narrative becomes the $4,200 rally isn't ignoring the data. It's driven by the cost pressure within the data. Gold is doing its job as an inflation indicator.
Exactly. Nailed it.
Okay, that makes sense. But getting that argument across relies heavily on how the whole piece is structured, which brings us nicely to the third point, structure and flow. We need to sharpen the structure, specifically by getting that crucial macro context, the government shutdown, right up front.
Yeah, I noticed that too. Right now, it sort of works backwards, doesn't it?
It does. We get the gold price, then the 10.7 headline number, then all the strong components like orders and shipments. And only then does it say, oh, by the way, the U.S. government is shut down and markets are flying blind.
Right. By the time you get that crucial piece of context, you've already processed all the data without fully understanding why this particular regional report might be carrying extra weight or why gold might be acting nervous.
Exactly. The text even says the report helps alleviate some concerns. But the reader doesn't know what concerns until later. You've kind of given the answer before fully setting up the problem.
That shutdown context, the data scarcity, it's fundamental. It explains why people are scrutinizing this regional report so closely, and it explains the safe haven bid for gold. You need that frame established first.
Otherwise, presenting the 10.7 number first almost diminishes its significance because the reader doesn't yet appreciate the broader uncertainty and lack of other data.
Totally. You need to set the scene. So the actionable step is clear. Take that paragraph about the shutdown, the funding issues, the data blindness,
Exactly.
and move it right near the beginning, just after introducing the gold rally itself.
Exactly. Introduce the rally, then immediately establish the environment of high uncertainty and missing data, then dive into the regional survey. When the reader understands the shaky ground we're on, those details, like this being the third positive reading in 4 months, land with much more impact.
And it makes the safe haven argument for gold feel natural and logical right from the outset, rather than something bolted on later.
Precisely. It just creates a much clearer narrative flow. Okay, this is good. It feels like the core analysis here has all the right ingredients. The facts are solid, but it's about rearranging them and deepening the why behind the observations, moving from just reporting the paradox to actually resolving it.
Yeah, I think that's a fair assessment. It's about taking it from good observation to compelling explanation.
So, to sum up the actionable suggestions for really elevating this piece. First, get specific about why gold seems detached. Connect that government shutdown context directly to gold's safe haven appeal and the heightened focus on limited data. Don't just say it's ignoring things.
Right. Explain the prioritization. Second, make the inflationary signal the star. Recenter the argument around the prices paid jump to 52.4 as the rational driver for gold, suggesting the market is smartly hedging inflation revealed within the report, not ignoring output.
Make the cost pressures the hero, not the villain's sidekick.
Exactly. And finally, fix the flow. Front-load that crucial context about the shutdown and the resulting data blindness. Set the stage of uncertainty before presenting the regional data points.
Excellent. 3 clear steps to turn this from a description of a puzzle into a convincing solution for why gold is behaving the way it is near $4,200. Great stuff.
Definitely workable improvements.
Absolutely. We'd be very interested to see how this evolves with these changes, so please feel free to send the revised version back our way for another look.